Hi, welcome to 28th of January 2025, the Tuesday weekly expiry of Sensex. Yesterday I couldn't make a video, but on Monday I had entered a few positions in Sensex options, short Strangle, the position we took yesterday. So I sold a couple of lots on put side, and I did place an order to sell a couple of lots on the call side, but only one lot got filled in. So that's how yesterday, end of the day, we carried forward an imbalanced short Strangle with two put options sold and one call option sold. So let's see what were strike prices we selected. So on the call side, 77,500 CE, and on the put side, 74,000 PE, 3,500 points apart from each other, with about a day and a half left to expiry. Because I had entered this trade around the mid of Monday, the midday, or after half the session was over, and I left out about 1,700, 1,800 points on either side, which is more than 2%, because on Monday itself the index had gone down significantly, about 1%, 0.95, between 0.95 and 1.2 percentage points it had gone down, and that opportunity utilized to enter a short Strangle position with widely spaced apart strike prices for strike prices. So what we did today, let us review that. If you see, then at the very beginning of the day, at the very opening itself, what I did was I exited one of the lots on the put side. So we just see that we enter the day with two puts and one call sold, right? So it's an imbalanced trade, and I wanted to be cautious on the day of expiry, even though the strike price was about 1,500, 1,600 points away from where the current price was. And that's how far the strike was. But still, you don't know, because the day earlier, DeepSeek, the new AI model from China, has been making a huge impact on the markets, and the US market, particularly these tech stocks, Nvidia and others, they crashed by more than 10%, 10, 13% in a single day. And tech gurus have been predicting a very challenging competition for all of this US tech stocks. So we anticipated there could be kind of an impact of this on Indian markets also. Irrationality could have a big impact on Indian markets as well. So we didn't want to take chances. We wanted to ensure that we don't carry a risky position, particularly when it is imbalanced. So we exited it at the very beginning of the day itself. Though ultimately, as you would see, both the strike prices expired out of the money, and we are profitable because expiry happened within this range of the short Strangle strike prices that we had selected. And so we have a decent profit, and so it is a small one. So now let's look at what the margin requirements have been for this as of the expiry day. So there you see the required margin has been about 1.2 lakhs. So we did get a decent ROI over the margin, about 5.3%, close to that. If you take into account also the other lot that we entered on Monday and we sold on Tuesday, or other way around, we sold on Monday and we bought it back and exited on Tuesday morning. So it's in upwards of 0.3% on the margin requirement. So we didn't make use of the whole of the account value. We didn't do that because it was expiry date, and also today was a busy day for me at work. So a lot of items that I had to tend to with respect to work, so I couldn't get to spend a lot of time on trading today at all. So that's how it is. Now let's quickly watch at how the index has performed today and yesterday as well, because we couldn't have a separate video made for yesterday's price movement of the index. And bringing up the 5-minute chart, this is how the past 2 days look like. Both the 27th day on which we took the entry around the middle of the day, when the index was around 75,500, 75,600 mark. This was the move yesterday. It ended slightly lower after we entered the trade, and today morning the index opened up with a gap up. Then it went all the way up. It made an up move of 75,700 to 76,500, about 800 points move, 1 percentage point up we did. But again, it almost came down. The entire gains that it had made, it came down within a short span of time of just 10-15 minutes. It just made a huge move of 500, 600 points from there onward. So for people who are doing short strangles, well, it's going to be so. Those with strangles, they wouldn't have felt the pinch because they are far apart strikes and far apart strikes. But those doing short straddles would definitely have faced a very challenging day with huge swings that you see over here and the repeated up move that has been happening. So it was not your typical range bound market for a long period of time. I just kept inching up, and then suddenly it made a very sharp turn move. So we've got to be very careful about this kind of markets. So short straddle is again not a strategy you blindly use. Short straddle is not a strategy. Just like you use in any kind of a market condition, you need to see if it is conducive, right? Otherwise, forget about making profits. You will keep making consistent losses because there's going to be a huge move on either side of your current spot price. So that's how the index fade. And we are the 8th of January. That is the date we are at today. And we just got another couple of days to go this month. And what we will plan is we will have another video around 30th of January, end of the trading. And we'll just see how we performed throughout this month. So do watch out for that video. We'll just take stock of how our performance has been through this entire month of January. So looking forward to meet up with you guys. Thanks for watching. Goodbye.